in the business world, there's these it's called an MCA, merchant cash advance loan.
Oh my God, man.
So
Hey, listen, I did not know about that because, I get people that I be coaching
yeah.
and someone came to me about, local here.
Hmm.
And they say, D, I just want to, I feel like I'm out of options. I said, what you mean? What's going on? They talking about this merchant loan they got. I said,
Hmm.
tell me about the loan. How much is it? How's it funded? How's
Hmm.
the interest rates? Blew my mind. Blew
Hmm.
my mind. The next day, Jason, I never heard of it, right?
Yeah.
I sit down and I absorb everything. I said, this is what you got to do to get out of this. All right, we are back here with the Ron Day for the Hawaii Millionaire Mindset, the Blueprint Conference right here next week. And we're going to be kicking this thing off June 19th through the 21st. And there's no way possible we could be able to do this without our sponsors, man. I just want to thank my man, Jason Zinger with Pacific Business Funding.
Hmm.
Jason, how you doing, brother?
I'm doing great, man. Thanks for having me.
Awesome. So listen, man, business funding, that's probably like creative finance is one of my favorite parts. I
Yeah.
call it the art of the deal, man. So as you know, I've been doing my businesses for a while. And one of the things that I really kind of really captivated came really, I think it's the part that I like in the whole entire business where I'm doing business or real estate. I like structuring the deal as far as my working with the landlord, getting the best deals for my TI, my lease agreement,
Hmm.
because you'll be in those things for 10 years. And typically what you would do is a lot of times when you're doing deals, especially on the business side, you will try to at least line up your lease agreement, all right, to kind of go ahead and go with your whatever your lender, your terms on your lender, where that you don't want to sign a lease for 5 years, and then unless you got some option periods, and then you got this term for 10 or whatever the case may be. But listen up, man, before we get into it, because I love financing. I love financing.
Hmm.
Tell me more about Jason. Who
About
are
me.
you, Jason? Yes, about you.
Yeah. Well, so I grew up in California. So I was born and raised there. Been coming to Hawaii since I was a little kid, probably like 5, 6 years old. Um, about yearly, so it's kind of like my second home. Um, and then I got started working with business owners for doing financing when I was in college, actually, as an intern. And then through that, I did pretty well. I was always like the first in my level, whatever that would be, like interns and then junior associates, senior associates. And we took a company from, I moved companies, and then I took a company from 6 employees to 35 when I
Okay.
left, and worked with them for a very long time. Sales manager, doing all those things, and I had hit pretty much all the financial goals that I had set out. Like I had the nice car, had the house that I wanted,
Right.
even got the girl that I wanted, and then
Absolutely.
I looked around and I was like depressed and not fulfilled with my life, and I was like, oh man, like what's going on? Like what? I went for the wrong goal, basically, right? Like the money only fulfilled for a little bit of time, but I didn't like the way that I was doing business back then. And
Hmm.
yeah, so I just something had to change. So we moved out here actually uh, about 8.5 years ago,
Okay.
and did some entrepreneurial things. We got pregnant right away with twins.
Also,
So two
twins.
months in, I thought we were gonna like travel the
You got
world, and then
boys or girls?
two
Both.
boys.
Oh, awesome. Okay.
Yeah, and then when
All
they
right.
turned one, we got pregnant one more time. That was a
Oh,
single girl. So then we
okay.
had three under two, and then
Okay.
COVID had hit.
Oh,
So when she was like 6 months old. So I was kind of like locked up in the house for a very long time, and I
right.
couldn't really exit out of my previous career and find the new career path.
Hmm.
So I just kind of stuck with it a little bit, like kind of unwillingly. Did some consulting things for a while, but I was also always passionate about helping the small business owner. So I started just kind of like looking around Hawaii, just like seeing how I could help out. because we need a lot of resources out here, right?
Absolutely.
But it wasn't equipment financing so much because there's not
Okay.
that much equipment purchases here.
100%.
It's
Yep.
mostly working capital. So, and then during that time, this is like 2022. That's when I kind of started my relationship with Jesus. You know, started going to church and everything. My life started turning around, and I had purpose. And
Yes.
then about, so I did a ton of networking. I was going to like 2 events per week, like religiously, and
Yep.
met all the people. And I saw what was needed in the marketplace, which is business credit and education. So then, months went by and stuff like that. And my wife ended up quitting her job. God told her to quit her job, what she was doing, which was coaching, and then work with me. So 2 summers ago, we started Pacific Business Funding. And then, man, it's been like, we just been getting people coming to us left and right. Like it
That's
only took
awesome.
maybe 2, 3 months of
That's awesome.
outreach.
That's
And then
awesome.
after that, it was like referrals,
Awesome. That's
So
phenomenal.
yeah, and now we're growing the business. We got a team and we're looking to scale up even further this year and next.
Wow, that's quick. How big is your team now?
We just signed on the eighth person
That's
yesterday.
phenomenal.
Yeah, and I'm
Awesome.
looking for three
Congratulations.
more sales guys right now.
Okay. No, that's good. All right, so Jason, man, let's talk about, you saw a niche here in
Yeah.
Hawaii.
Mm-hmm.
And I think that, Hawaii is a very unique and tough market to navigate in as
Yep.
far as coming into business. It's not like, I do business here in Hawaii, but I also do business in the mainland. And doing businesses in the mainland move much quicker, a little, lot less complex. Um, what are some advice or that, and some things that you see that
Yeah.
someone here in Hawaii, that you can give advice to as far as, the complexity of doing business here in Hawaii?
Yeah, I actually really love doing business in Hawaii. I've always seen that ever since I was a little kid, there's a lot of people with a lot of talent and great service, great customer service. Maybe
Absolutely.
not the greatest at financing and business knowledge and marketing, but they have a great product. Like those are the people that I was very passionate to help because I wanted to like help them grow. Because I'm like, well, you got great food or you got great service, but
Right.
not that many people know about you. If mainland gets to know about you, they'll come use you or like
100%.
come
Yep.
visit.
Yep.
So those are a lot of the people that we end up helping now. Um, and then something that always sticks with me, this guy Daniel Kong said to me that in Hawaii, like you could look at it as there's challenges in business, but that's also the opportunity.
Yes.
Because
100%.
since there's so much challenge, like literally there's people in my network that's like service providers, like insurance people, and people are shocked when they answer the phone. And they like give you business because you answer your phone and like you show up on time. Like it's super low barrier to like gain their trust because there's not that much options.
Right.
Um
Right.
and it's hard to find reliable people. So if you have a good service, you are a like, morally ethically right person, you're trying to do right by your client, and you show up and you answer your phone call, like, I tell people
That's it.
you could thrive out here,
Man, yeah, no, man,
That's pretty much it.
it's a hidden gem for sure.
Hmm.
If you can crack it, like Daniel, great friend of mine, and one of the things is that if you can get in the Hawaii market, right,
Hmm.
because it's only so much. It's like land and stuff. You get in, get
Hmm.
a good, have a good business model, great customer service.
Hmm.
You would thrive here. And I try to tell
Yeah,
people
yeah.
now, what you make on your, even though the real estate's higher, I paying, some places I got out here, I'm paying $25,000, $30,000 for that same deal, same size. I'm probably paying like 12 to 15, 16,000, say in Dallas or North Carolina. However, though, the revenue is going to be much higher. So the spread, so my profit margins could be still the same, but because my revenue is higher and I still gotta 25% margin, profit margin on $1 million. That's 250,000 versus having that at 25% on $500,000. So,
Right.
that could be, different game. But no, I love doing business here, for sure.
Yeah. The
And you definitely
the
right.
coconut wireless thing is so real. Like just by networking, I mean, it took a little bit of time to gain people's trust, I think, but once you establish that trust, unless you break it, it's just going to keep growing.
Yep.
So that's why, like, right now, it seems like we're kind of like on that exponential growth path because a lot of the people already know us and they trust
Right.
us, they like us, they know a friend, or maybe they've already worked with us. So there's kind of enough market saturation already, and we're like less than 2 years old. That's
Oh my
crazy to think
God.
about.
Yeah, 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 yeah. No, you're out, and I see you around, networking. You doing it. You really coming in and you out working. You know what I mean? Like it's just
Hmm.
opportunity. You're
Yeah,
you
yeah.
you going. You're in the right places. You're working hard. You
Hmm.
outworking the person to your left and right, and that's what it is. No, I don't care what business you is. I don't care if you own McDonald's or whatever the case may be. And you're gonna your goal is come in and just work hard,
Yeah,
be
and
a
yeah,
great stewardess, and just
yeah,
treat people well the same way
yeah.
that you want to be treated, and just that's just as good
Yeah,
business
it's pretty
value. That's all
simple.
you're
Yeah,
doing. Yeah.
yeah. Treat
So
people well. You show up, do the thing, be a man of your word. Follow through with the things that you say that you're gonna do. That's pretty much it.
right,
And people will come back and they're like, well, and then they ask me, what else can you do?
right, yeah,
Like, who
yeah,
else do you know? Because it's like, well, that was a good
yeah.
experience. Let me get some more of
Right,
that.
and I can only imagine you give great, you're doing this great customer service, and they bring people back. They coming back, and you're like,
Yeah,
I need this product. Well, that product is going to make you better. So now you got to go find that product, which
yeah, yeah,
forces you to say, there's another niche. Hey, we
yeah,
need
yeah.
we need
That's what's
bridge
been
because I know,
happening. That's what's been
yeah,
happening.
yeah.
But I
So
don't
now that's
think that
good.
this. I mean, if I still lived in California and stuff, I mean, there's millions and millions of people. There's a
Doing what
lot
you're
of
doing,
people that have alternative financing solutions. Maybe not
right?
exactly like how we do it, but I don't think that I would have this type of
Success.
kind of market penetration,
Yes.
like be known. I wouldn't be known in
Right.
California the way that it's been able to happen out here
Right, right,
because of people
and
like
those,
us.
right, and like you said, it's the networking and those
Yeah.
circles of networking. I think a lot of us know each other. Maybe haven't
Yeah.
did business yet, but kind of
Yeah.
everybody knows who's doing
You
things
seen
and
them around. Yeah.
send them around. So
Yeah.
I get you with that. So I kind of want to kind of like go into deep. So let's talk about the entrepreneur. Right,
Okay.
what is the biggest mistake a new entrepreneur makes when trying to get funded?
The biggest mistake by far and away is they use their personal credit first. So
No business
I actually
credit.
just had a decline happen right now, like maybe an hour ago, because that person did that exact thing. So the most entrepreneurs will use their personal credit cards to fund whatever they got to fund. And they're like, well, this is what I got access to, so I'm going to use it. But if you just start with good personal credit first, you can get business credit right away. I've
Right
helped
away.
people with 7 days in business. They just got their tax ID yesterday. Okay, now we can submit the deal,
Right.
and get you approved. And then when you get approved, it doesn't show up on your personal credit anymore. It shows up on your business credit. So you're building that business credit.
Business, absolutely.
So when you
And
use that debt, it has no effect on your personal credit report anymore. So you've kind of solved that underlying problem. But like the case in point, the person from today, they've been in business a couple years or whatever. They use this company to raise a bunch of personal credit cards to
oh my
pay for
God.
their
Uh,
stuff, right?
oh my
They took
God.
on $20,000-$30,000 of debt, opened
In
up
a
4 or 5
personal
cards, and then like
it's
it was reporting good when I had the deal, and then by the time we got it through the system, though, all the accounts had started reporting. Her score dropped like 70 points.
oh my God.
Yeah.
Oh man.
So now
So
she can't
so
get her loans.
And we now and this one of the things, man. Like, one of the things I love teaching. I just love teaching people about business and real estate, things that I have learned of 20 years of business and real estate investing, and commingling money together, man.
Yeah.
I see people that just not knowing either how to run their business the proper way, because one
Yep.
of the things that we teach people is that you don't want to penetrate your entity by commingling your personal finances, trying to fund your business, or vice versa, is not passed through right, and
Yep.
kind of can get confusing, and you open yourself for liability too when you're doing that.
It's such a safer way to grow because, especially like the flipping community, right? They're always trying to leverage and they always got to
Hmm.
finance the next project, always applying
Yeah,
for mortgages.
yeah.
So in flipping, things go sideways often.
Real quick, real
So
quick.
you might need 20 grand to go pay for this kitchen or whatever. If you use business credit first and you stay at your 740, 750 FICO score, you
Yep,
used all your business credit up, you could still get more credit because you got good credit still. You could
yep.
get another business card, you get a loan, you can get a personal credit card or whatever to raise additional capital to finish your project. On the other hand, if you maxed out your cards on your personal side, you're at a 650, you're toast. You can't
Done.
go anywhere. You got to go
Yeah.
borrow from your parents or something.
Right, man. So, and one of the things that we're seeing, and I don't know if you have any of your clients, but so, and we do most of our multifamily assets that we are repositioning all our assets into one market, and that's
Hmm.
DFW. And I've
Yeah,
been out
yeah.
there in DFW, man. I came in with a during that post COVID, the houses values went up, rates went down all the way to 2%, multifamily 2 point some percent, 3%, and it's it constrained those cap rates, compressed, and a lot of people came in and it was buying, it was flipping, there was getting bridge debt, hoping they can go from bridge to perm, or where
Hmm.
it's
Hmm.
agency, Freddie Fannie or HUD, and and one of the things that I pride myself on, that I'm probably one of the most underleveraged persons that's out there in the game, and I think that's goes with one word, being disciplined, and
Hmm.
never over leverage. I
Hmm.
never over leverage. And I'm so thankful, because right now what we're seeing in
Hmm.
the market where I'm at, I'm scooping up deals for almost half of the price. I'm getting like 40% discounts. And it's because there's a lot of people that was over leveraged. There was a
Yep.
lot of, just, using, just trying to rob Peter to pay Paul, rob Peter to pay Paul. All the feds, Republic's going to come in. Oh, we're going to change this. All the feds going to bring that. And they keep on kicking the can. Well, what we're saying now, we have these owners that, wanted $220,000 per door, trying to hold on to that. Now we see those prices go for 220,
Hmm.
160, 150, 180. So we see this huge discounts, things that was, things that we was buying, 25 million is now 18 million. I just got a
Hmm.
deal on the contract that I'm closing next month. That we was talking about, that was $20.4 million,
Hmm.
20.5 million. And I got that deal for 12.4 million set to close. And it's
Yeah.
only one thing that that they these sellers out there that's in hot water, the sellers just want certain to close. So I'm coming
Hmm.
in
Hmm.
giving a lot of cash up front, easy
Hmm.
close, short DD, and
Hmm.
we were seeing that. What are you seeing as you looking at your past? Maybe you got some bad debt, or what are you seeing right now in today's economy? We talking we talking about June, right?
Yep.
We June. What's the day's date here? June 13th. So what are you seeing? June 13th, 2025.
Hmm.
What are you seeing out there?
Like with like a trends that's
Yeah, the
happening.
trends. Yeah, the
Well, I
trends.
mean, yeah, but something like you said, the at least in the real estate community, a lot of people with high leverage, and I actually just seen one guy who's having to liquidate, a handful of his assets here because he's basically not able to pay his bills. It's like stuff's going overdraft, and it's pretty tough.
Right.
But and I told this person, I said, but this is like over a year ago. I kind of saw it happening, like the start of it. I'm like,
Right.
hey, you should probably like, why don't you just sell something instead of do this? I'm gonna
Right.
just get you some business credit and just start using that instead, because they were using a lot of their personal credit. Um, but I am starting to see some of that. In the commercial space, there's obviously like the rate adjustments that's happening. So people's interest rates are going higher because
Yes.
they bought before COVID or during COVID, and then now it's 5 years later or whatever. The Wall Street Journal rates is up, Fed rates is up,
Everything's
so
up.
their payment went up, but
Right.
their rents received didn't go up as
Right.
much.
Yeah. Yeah. They can't
So
meet that pro
a
forma.
lot of people in trouble. In the business world, there's these it's called an MCA, merchant cash advance loan.
Oh my God, man.
So
Hey, listen, I did not know about that because, I get people that I be coaching
yeah.
and someone came to me about, local here.
Hmm.
And they say, D, I just want to, I feel like I'm out of options. I said, what you mean? What's going on? They talking about this merchant loan they got. I said,
Hmm.
tell me about the loan. How much is it? How's it funded? How's
Hmm.
the interest rates? Blew my mind. Blew
Hmm.
my mind. The next day, Jason, I never heard of it, right?
Yeah.
I sit down and absorb everything. I said, this is what you got to do to get out of this, right? Try this. I said, I want you to go back to them. I need you to tell them, like, yo, you can't pay this because it seemed like it's unethical the way
Hmm.
that it got her structure in there on the pay. It don't even make sense. But you need to go out there and say you need a workout plan because
Hmm.
I want to shut down everything just to pay you your unrealistic interest
Hmm.
rates the way that y'all calculated it.
Hmm.
And immediately, I swear to you, the next day, I get someone from Dallas that I was mentoring call me about the same thing. He owns a clothing store. I'm
Yeah.
like, yo, I never you. It's got to be something. Guy, I tell them both. I tell them both. Both went on and did exactly what I told them to do, and the
Hmm.
banks went back. Those merchant service loans went back and worked with them. But I only had those two people. But
Yeah.
when they told me, and I was like, man, I just heard this yesterday
Yeah.
from a good friend here in Hawaii. And I helped them coach them through that piece. You know what I mean? Because I do very complex and I love, like I said, I do complex financing.
Yeah.
And so when I get something like that, it just feels so bad because I tell people, man, like the SBA and the government and they just want you to, as a business owner, they just want you to be a business owner, but they just want you to create jobs to stem the economy.
Hmm.
At the end of the
Hmm.
day, the SBA is still going to make you be a person guarantor. They're still
Hmm.
going to make you put some collateral up there. They're still going to make you do that. But
Yeah.
just guess what? You're going to be working, you know what I mean, barely paying your bills if you're not making good business decisions like this. Like
Hmm.
if your loan freaking, $1,500 and you go get this merchant service and you paying $6,000 and I think she said they did it based off cash flow. You know what I mean? You
Yeah.
doing great cash flow and now your cash
Yeah.
flow just
Revenue based.
diminished, right? It's just diminished.
Yeah.
So I'm like, wow, man. But and what? It's funny you bring that up. It just blows my
Yeah.
mind.
Well, that's one of the problems that we go out and solve. So, quick story on one of the clients to kind of just showcase what we see. We had this guy who he had 6 locations here on Hawaii. He was actually on the army bases, and he had a bunch of merchant loans. I forget how many, but the guy was doing good business. A couple million a year, growing company, doing well revenue wise, but he had at one point 30 grand a month, he said, in debt. Mostly because of this merchant cash stuff, right? Because it's all short term, it's all 1 year or less typically.
Yep.
And it's a daily payment, weekly payment. So very high interest rates, 30% plus typically is the rates. I've seen like as high as 80. And he's just stuck and stressed out. And so what we
eighty
did,
percent.
yes,
Oh my god.
yes. But I always tell people, you always think of 2 things whenever you get a loan or credit. What's your ROI? What's your exit?
Gotta have an exit.
And what we do a lot, we actually use MCAs still with some clients because I can help put them in a better position to then get them out of that deal and more on the backside. And it's usually used for those people that over leverage on the personal credit card side. So we
Hmm.
use it to pay down the personal credit cards. So that's exactly what we did with this guy. I forget exactly how we even started with him, but we coached him through, and I said, "Hey, we need to get you to about 30% utilization on your credit cards. If you do that, I could get you out of this thing." So we did one small deal after the next. I think we did three small deals for the guy. So you get like 50,000, you pay down a little bit of credit cards, and then he may pay down some MCA debt. And then his credit score would go up in 30 days. And then we got the next bank to do 50 grand, all unsecured,
All
right?
secure. Yep.
Unsecured. So another 50 grand. Okay, now we pay more credit card down. Now it's almost done. And then he's got a little bit of cash flow for his payroll. And then we finished him off with an Express SBA loan.
Yep.
That loan was 150,000 on a 10-year term. Cash flow is great. So we in like 3-4 deals, and then we got him the 0% business credit cards as well for like a year. Now use that for your working capital. So then we got him all this working capital, and then his payment went down to 5 grand. So now he's got
Wow.
$25,000 of cash flow after all that, and he's sustainable. The biggest thing that he told me though was he's less stressed out because now he can think past Friday payday of am I going to make it or not. And then now the guy's opening up 2 more locations, doing partnerships and stuff like that because he could see over the weeds. He's not thinking about his cash flow so much.
Oh man, absolutely. What so right now it seems like that, you have all these different product. Like
Yeah,
if someone's listening, watching this right now, and they don't know all the different because
yeah.
think about business. When I think about business, I'm thinking, hey, Jason does business. But we
hmm
just talk about what all types of alternative investment lending that you have out there.
So we take a very holistic approach to every client. So we're gonna understand what's their whole situation with their credit and their financials and their bank statements. Like what's the whole scope, and then we'll guide them to do this product first, this product second, this product third, something like that. But we do everything from the MCAs, we do equipment financing, we do regular lines of credit, we do business credit cards, we'll do SBA related things, bridge loans, real estate backed things, collateral based lending as well. So there's not like a huge limit on what we can do. It's more like dealing with the situation in front of us. If I like to see like what's the positive on the deal, I say
Yeah.
like okay, you got good credit but you don't have good cash flow. Okay, there's you can
I,
go over here. Maybe we're going to do business credit cards first, but once
right.
you get more revenues, then we can go to step 2
Right.
and go over here. You know what I mean?
Right. Yeah, and I like
Yeah.
that you actually coaching and you looking at it. You're taking a step back and you're just looking at it so
Yeah.
far.
Yeah.
So I'm not just gonna look at it just here, but it's just look at like you said. Let me look at you. Let me look at your whole
Yeah.
holistic. So
Yeah,
now
yeah, yeah.
that's
We look at the whole picture, and then, um, you know, uh, from our side, our job is basically we have to understand what the bank's credit appetite is.
right.
Because there's some programs where, hey, you don't need revenue to do it. There's
Right.
no tax returns required or this and that. But then there's other programs where you do need that, and you are going to need to show your bank statements or your tax returns or whatever. And so, does it meet that criteria or not?
Right.
How's your credit situation? Does it meet the criteria or not? Can we do something to increase your credit score in the meantime, and maybe try it in 60 days from now?
What is your average loan size that you were seeing that for you for your
Um,
company?
Majority of the deals that we see is about 100,000.
Okay.
Obviously, if it's a real estate related thing, then it's way higher than that. But
Okay.
for like the average like small business person, is something about that.
Okay.
Um,
So how about this then? What piece of advice you would give someone trying to secure $100,000 funding from you? Like what advice that you
The
give them
main
to
the
be able to
main
secure
thing
that?
that I teach people is you got to keep your business and your personal credit separate, and you got to keep your credit scores high, because I don't care what program it is, they're gonna check your credit unless they're doing deals like you at 20 mil. People are gonna care about your credit score, right?
Right. Right.
Especially in the small business community. So you have to have the 700 plus first to open
Right.
up the next door. So if you don't
Right.
have that, you got to work on raising your credit up. The
Right.
better you can raise it up, the more options that you're going to have.
Yeah, they care. They definitely care. Don't give two cares about my credit score. I tell you that. Even I keep
Yeah.
my great credit score, but when I realized that it was easier for me to secure a $20 million deal than me to get $1 million SBA loan, it was
Yep.
such easier
It
because
is.
they
Yeah.
just looking at, hey, what is the cash flow? What is the
Mm-hmm.
DSCR? And
Mm-hmm.
then how does my liquidity look? What does my net worth
It's
look? My
it's
assets look? That's it. That's it.
it's
That's
totally
all.
different. It's kind of like buying a personal home versus buying an investment property.
Right.
The personal home, they're going to look at your tax returns. They care about how much money you make. With
Right.
the commercial side, they care about how
How
much
much
the
the
business
property make?
makes or the
Exactly.
property makes.
Hundred
But in
percent.
the small business finance world, it's kind of like a blend of both, because we're dealing with companies that's doing a few 100,000 up to like 5-10 million a year. It's pretty much being run by the owner for the most part. So that's why there's so much emphasis on the personal credit scores. And at the same time, like, certain banks, they legally cannot lend or issue any money if you're not at a 700 or 690 or whatever.
Man,
Doesn't matter
man,
how good your story is.
like I told you right before this call, I had finished up my kickoff call with my lender,
Mm-hmm.
and I'm just now thinking I'm building this gym out in Kauai.
Mm-hmm.
Very small loan in comparison to the loan that I'm doing
Mm-hmm.
for 100 unit apartment. It's,
Yeah.
you know, and oh my God, it's like they are like this little SBA. No, I think
Oh
I'm trying to
yeah.
get like $600,000 or something like this. Very
Yeah.
small and considered to. I'm like, man, y'all
Yeah.
make my. It's just a headache.
You
It's
gotta
like,
you gotta have all of your ducks in the row, and then they're gonna want to see all your entities
yeah,
that's connected to you too.
and that what blows their mind because that's gonna really get them crazy because I'm very complex. I'm disconnected
Yeah.
this,
Yeah.
and that's one of the things. Oh yeah, disconnected. Want your wife to be the guarantor? I'm like, man, we ain't playing that game, man. I changed the operating agreement,
Yeah.
whatever, So, one of it's just various things like that is super complex, but I do see that 100% that as you continue to grow and continue to get bigger and you start doing these bigger deals is more so who is the person. So we do it's called a bad actor
Mm-hmm.
check, just making sure that, you don't got no bad actor stuff in there. So we do that, and then they look at your net worth and look, liquidity. That's it.
Yeah.
I think they do run my credit. They do run my
Yeah.
credit, but they don't go back and say, "Oh, dude, you got 30,000 sitting on your Amex over here,"
Yeah.
and
Yeah. Yeah.
they ain't
Pay that
question
down.
none of that. So, hey, pay that down. We need you to pay that down for the close.
Yeah. Yeah.
It's none of that.
It's a
So,
different game. You got to know what game you're playing.
yeah, yeah. So you're definitely sure for that. How important is mindset when it comes to money, and what like limited
Mindset.
belief do
Yeah.
you see holding entrepreneurs back the most?
Wow, that's a good one.
Yeah.
Mindset around money.
Yeah, yeah, yeah. How
Um,
as important is mindset when it comes to money? Like how important that is because
I think. I
you have
mean,
a lot of people have
well,
those limited belief. Yeah,
in general, I've always been a believer. Like, mindset is 90% of anybody's success. It doesn't really matter what you're doing. Um, I don't think that skills matter too much, because I've seen and I've experienced myself. You could be good at something, but
Mhm.
then if you let your mind get in the way, then you'll just sabotage whatever the thing is, and then it'll fail anyways. So
100%.
you'll make the wrong decision, or you'll get scared or whatever, and then you just like back out. Um, but I think that something speaking to the mindset, at least in Hawaii especially, there is this mindset that debt is bad. I
Right.
don't think that debt is bad. Debt is the tool. It's just like, the saying with the gun or the knife. It's like,
Yeah.
yeah, it could be used for good and evil. It could save your life or it could kill your life. It's a matter of how you're using it. So that's why I kind of preface that you should look at what's your ROI, what's your exit strategy whenever you're going to enter into any type of financing thing. You should know those two things. It doesn't matter really what the interest rate is. It's what's your ROI. Like if I told you that you have a 50% interest rate to go get this money at 100 grand, but you're gonna turn around and make 300, and that's your option. Should you do that deal or should you back out? I would say to do that deal. You're gonna make 200 grand or
Right.
150 after you pay the interest. Um, but on the other hand, you get a great financing deal, 5.99% or whatever, but it's to buy like, I don't know, like a Bentley or something like that, or something that's
Right.
not going to give you an ROI, or maybe it's going to give you like a 2% ROI.
Right.
Should you do that purchase and financing? Probably not. Um, so I think it's just thinking in terms of that, right? Like, what's it going to
Right.
do for you? Don't get caught up too hard on the interest rate, but more on the structure,
Yeah. The
right? Like
structure
like there's
and the
these sub
assets.
two people, right? The sub two people that
Hmm.
you could offer you could offer the seller more than what their asking price is sometimes if they give you seller financing at 2%, because
Right.
that's better than a bank loan. And then you
Hundred
don't even
percent.
qualify for it.
Yep. Hundred
So
percent.
to me, it's like all about the deal, just like you said. Like it's the art of the deal and how you structure everything. You
Yep.
gotta, you can't just look at one aspect of it, like what's the rate or what's the term. It's like no, I want to know the what's the payment.
Right.
What's the interest rate's important, but what's the payment? How much money do you have to put into it? A lot of the things that we work with, you put no money down. You're
Awesome.
just getting credit or getting access to money. So you could potentially have like an infinite type of ROI on that because you're using other people's money.
Correct. Nah. No. You're 100% right. I get it.
Yeah.
Yeah. No, man. That's good. Okay. So I'm about to wrap this up here soon. Not counting your business because it seemed like you came here and you got yourself a nice niche. You growing, you penetrating, you going. It seemed like you got the economy to scale as you continue to grow your teams.
Yeah.
But what is there any or what do you see the biggest untapped opportunity in local
Ooh,
businesses as far as the ecosystem here in Hawaii? What do you see?
Hawaii local businesses.
Yeah, like untapped. Like it's like, hey man, this right here. If there was more, I think these are good cash flowing machines or any
I don't know. I
any
mean, I don't know
untapped
if this is
opportunity. Any untapped opportunity. It could be
an
real
untapped
estate.
opportunity.
Have you seen any or
I don't know about an untapped opportunity. I mean, I do. One thing that I see like kind of coming down the pipe is restaurants are going to change. Um, and probably retail as well. But I've been looking for a great service myself to
okay,
do like some good
service based.
service based things, meal prep, nice food options that's not crazily priced.
Right. Okay.
Um,
Nah.
I don't know why the meal preps are like $20 right now when I can go get a dinner for less than that.
Right. Yeah.
Um,
It's crazy. Yeah.
and then it's like if you gotta like drive and go get it or whatever. But I think more like prepared foods that a restaurant might be able to have, and you just go stop by real quick, go pick it up, then you got your food ready to go. Something like a hybrid of a meal
Yeah.
prep and a restaurant. I do see that. But I think that a big trend is I'm a big believer with like trust. Like once people see that you do good work, they want to buy the next thing. And it's
Absolutely.
exponentialized in Hawaii. So I mean, I think more of like vertically integrated companies is going to be the trend.
That's it.
So they're going to
And I
bring
think that
people in
yep.
just like you, right? Like
Hmm.
they come in from one thing and you got like 90 businesses or whatever. Like you just bring them to the next thing And if
Yep.
you did good on the first one, you'll probably do good on the second one.
Yeah.
If you do good
Yep.
on the second one, bet you they're going to go for the number three, and then just
Yeah.
keep the ball going.
Yeah. I was just on a call with I got Chase private banking, and they said, D, I was been with them for a while, maybe a couple of years,
Hmm.
and I consolidated half my accounts, and then I ended up getting a new guy in Dallas. My guy ended up retiring. He said, hey man, can we, I just got him. Great guy, by the way. And he said, it was within like 2 weeks. Say, think we can bring all your accounts over? And now you moving too fast. Like we got to build, we got to definitely
Yeah, yeah,
build
yeah,
that relationship. So,
yeah.
no, yeah, you're 100% right. Economics, economy to scale. Also, uh, I think there's more baby boomers that's going to be ready to retire,
Oh
where that
yeah,
you can
yeah, yeah.
consolidate some of those service based businesses.
Yeah.
HVAC companies. I like any service based business. If you got a system, you got a process that you
Hmm.
can put in there, and then can put more structure in there, and go get some good like creative financing, and
Hmm.
and help the company grow. For you can consolidate and add on to those types of acquisition plays. There's
Yeah.
some of the stuff that I never I buy businesses, but I like to build them. I'm like
Mm.
the most
You like creating it.
risk on the creating the business from
Yeah,
dirt, like
yeah,
just
yeah.
going out there and like looking at a building and say, oh man, it's so
More, it's more
horrible, but I
fun.
can see it. It's more fun.
Yeah.
um and it could be more rewarding. I tell people though,
Yeah.
if you start out, you might want to buy a mom and pop service based business that
Yeah.
maybe you can get that for maybe two and a half multiple on that based off the EBITDA. But what I like doing is going in there negotiating with the landlord, getting tons of TI, tenant improvement allowance,
Hmm.
and going to find me a lender that's going to give me the other 50%, 60% to build that out. So
Hmm.
now I may be out 1.1 million, but half a million came from the bank, or
Hmm.
500,000 came from the landlord, 600,000 came from the bank. I go out there and sell that business, for $2 million, easily.
Hmm.
So or what happened is I could be the other guy and say I'm gonna go buy D's business, But the question is, when I see is, are you going to be able to maintain that? Do you got the systems and process? And that's what I have learned over years of doing business. You have your top operators.
Hmm.
You got all these people that's out here doing business, and they said 10% of Americans are entrepreneurs or producers. Of those
Hmm.
10% of producers, how many of them are the top? Who the 10% of the 10%? That's who you want to do business. You want to
Yes.
do business with, but you don't want to buy those guys. You don't want to buy my business if you come in there, because you're not going to be able to sustain. You're going to pay a
Right.
higher ROI, and it's probably
Right.
going to drop down because you don't have the support, the systems you're
Yeah.
working
Yeah.
in, and
Yeah.
all
Yeah.
those
Yeah.
things.
Yeah. 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 Yeah.
So I have learned that over time. So it's real easy for
Hmm.
me and real comfortable for me to go in there to purchase anybody's business, because I feel like I can go in and rechange it and create more value. But that's something that I have learned and just
Yeah.
been in
So you don't
business.
want
Yeah.
to buy somebody that's got like a well-oiled machine.
Oh, and they
You
got
want to buy like the kind of the fixer-upper.
the fist upper. You want to grab there and say, "Oh, this guy's not paying no money in marketing.
Yeah.
Their systems that have no systems, no process, no
Yeah.
KPIs in their business. Sit down and tell them about your operations. You sit
Hmm.
down. We do y'all do no weekly meetings, no huddles, no reporting, no. Tell me about the finances. Tell me
There's a
you
lot of
don't.
that out here.
As tons of it, and and you go out there and you buy those business, and you just come in and you just put in a system, and you just bring those, say you can grow. And the only thing you did was create a system, a process. You put them in your ecosystem, and then it's like a bookshelf. I tell people it's like a
Mm.
bookshelf. It's just I'm building businesses. It's like, yo, D, how you are able to still build these businesses? Because I got systems, I got process, I got organization, I got structure, I got a great team, I got everything is in house. I don't got no third party anything, right?
Hmm.
So and it helps us.
How do you take on these new opportunities though? Because I
Mhm.
mean, even for myself, like I got one and I'm kind of like getting into the second thing.
Mhm.
Um, but I just I'm like, no, I gotta stay focused. I gotta stay focused
I
and
think
just keep growing the main
yeah,
thing,
yeah,
you know?
yeah. No, I'm glad you asked that, because there's two types of people in the world. You gotta know who you are, right?
Okay.
You have people that will go out there and kills it, be great at what they do, make $1 billion, but they're great at focusing on one thing. That's how they
Mhm.
built. You can't change that. That's their makeup.
Mm.
They create this trait around age 12 years old, and that's kind of like that's how you figure out your traits. It's this software we use. Spend
Mhm.
tons of money using it. Called but and then you have the other person, right? And that's your real person. That's those people kind of like me, man. The way that my mind operate is I would lose my mind trying to try to do one thing. I would get
Yeah.
so bored at doing that one thing that I need to have like 6, 7 things going on, like a hamster on a wheel. So
Yeah.
I like to keep on going because what happened is when I get tired of doing that one thing for the day that I worked on for 2 hours, I get to go to the next one, get to go to the next one, get to go to the next one. And when I see people out there who reminds me a lot of how I operate, but he does it at the highest level, that's Elon Musk. It's the
Mhm.
same way I understand his brain. I know people like, how can he do Tesla? How can he do this? How can he do it? Well, those type of people in the world, you know what I'm saying? That's 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 their makeup, you know what I'm saying?
Mhm.
Where they could and then behind that though, you gotta have structure, you gotta have a great team, great organizer, you know what I'm saying? You
Mm.
gotta have great COOs and things like that. Yeah.
That it does. My that's how my mind works too. But I think a lot of my mentors they've told me to just kind of like stay
Focus on
focused
one thing.
until like a certain point maybe.
Mm-hmm.
And we're getting a lot more systems in place for what we do,
Yep.
so I don't have to do as much of the day to day. But I think that's probably where I'm at right now. But
Yeah. No,
maybe
and
it's
I
a different
think
conversation next year.
yeah, and I think that, when you the biggest thing that I see entrepreneurs, those remember I was talking about the 10% of the 10%. Well, the 90% of the 10%, they don't know how to go from working in the business to working on the business. I
Right?
don't
Yeah.
work in
Yeah.
my
Yeah. Yeah.
business.
Yeah. Yeah.
I work right here. I don't go.
That's
I'm not in my car. When I'm flying out, I'm shaking hands with lenders and what I'm saying, meeting contractors, and I'm flying back to Hawaii. That's the part right there. How do you go from working in the business to working on the business? Once you learn how to
yeah.
work on the business, that's when you step outside and create
Yeah.
more businesses.
Yeah, you need more people. That's what we try and do. Like after we get the financing done for people, would
Mhm.
we just match make them? Like hey, different services. Like, do you need bookkeeping? Do you need a CFO or something to get stuff off the person's plate so that they can have time to work on the business versus like in the day to day so much. I mean, I've seen what it's been doing for me. Like, I can think a lot more clearly when other people are doing the day to day stuff, and yeah, seeing on a
Okay.
high level.
Awesome. All right, look, man. Guess what? We're gonna wrap this thing up, but before we wrap it up, we're gonna do what I call the fire round. All
Okay.
right. So just quick answers, you know what I'm saying? Quick, high energy. Don't overthink it. Just shoot whatever you come in your head.
Okay.
One number every entrepreneur should track on a weekly basis.
Leads.
Okay. What's the first thing you do every morning to win the day?
Read the Bible.
Book a podcast that shape your financial thinking.
Overgrow
Oh,
is what
okay,
I'm
okay,
on right now.
okay. One thing you never outsource as a founder.
Creative deal making.
I like it. Creative deal making. Yeah, because the founder, that's the art of the deal, right?
Hmm.
Finish this sentence. To build wealth, you must
Be righteous.
be righteous. All
Mm.
right. There we go. That's my man Jason with Pacific Business right here. And tell them right now if someone's watching this right now and they want to get funding with your company, how can they reach out to you?
Probably the best way to reach out to us is we have a website, pacificbusinessfunding.com, but we're pretty active on our Instagram and we answer our DMs every day. So you could book a call through there. You can also get, see different case studies and like get some educational pieces inside of that as well. And that's at
Awesome.
Pacific Business Funding.
Awesome. Awesome. Okay. All right. Well, hey, listen, that is a wrap. We're going to end this thing right here. Hey, Jason will be at the Hawaii Millionaire Mindset, the Blueprint Conference next week, starting June 19th to the 21st. See you there. I'll see you, Jason. I appreciate you. And that
Appreciate you,
is a
Jerome.
wrap. All right. Have a good day.
All right. Thank you.